Morningstar
First dividend stock
recommends
pick from
Healthpeak
that list that you're
Properties.
going to talk about today is Healthpeak Properties. Give us the details.
5-star rated stock trading at a 37% discount to fair value and has a 7% dividend yield. We
Wow.
rate the company with a medium uncertainty. And like a lot of the real estate sector and the REITs, we do not award it an economic moat, so no moat.
Now, Healthpeak is a REIT that's really undervalued, even by REIT standards today. So is this kind of a pound the table opportunity from your perspective?
So when I look at the story here, overall, it's a portfolio of medical office buildings and life sciences, research and development facilities, laboratories, and so forth. Really some of the most defensive real estate I think that you can own, in your portfolio. So I think the concern from the marketplace here has been that the rent increases that they've seen over the past year or two, is lower than what we've seen as far as, rent increases in a lot of other real estate sectors. And that to some degree is what's actually provided the opportunity for investors here. Now, the other concern going on is that, we are seeing, pressure as far as, CapEx spending in the healthcare sector overall, pullback in government spending here. So people are concerned that maybe releasing spreads, for life sciences will be lower going forward. In our view, we don't think that's as much of a concern for this specific REIT as we do for other life sciences real estate. So for example, where we see more of the spending pullbacks is going to be more among public entities or universities, whereas most of the real estate here is going to be leased out to companies in the private sector instead. Now, I also took a few minutes to speak to Kevin Brown. Now, he's the analyst that covers, this company. He's very confident in his valuation. Management recently reaffirmed their 2025 guidance. So they're looking for adjusted funds from operations for $1.81 to $1.87 per share. It's a little bit different metric than what you're going to hear about, like earnings per share. But again, what we're measuring here is the cash flow that's going to be available to shareholders. In his view, net operating growth income, is going to be, the guidance is pretty conservative. And he's also noted that based on where the stock is pricing, if he kind of backs into where he thinks the market is making kind of that implicit assumption as far as what the valuations are on the individual real estate and buildings here, and he looks at where that compares to, actual real estate transactions he's seen over the past year or two, a lot of what he would call like mid-quality medical office buildings, have traded at levels that are higher than what he thinks, kind of the quality level of doc is going to be. He thinks that, the real estate that this company owns is higher quality than what we've seen for some of these other trades, out there. So again, he's just confident in the valuation. He's confident the company is going to be able to maintain its dividend. In fact, in his model, he's looking for annual dividend increases of 4%, per year. We're only modeling in, 3.25% growth in releasing spreads, in the future. It seems relatively conservative to me anyways. And then lastly, the company is also out there repurchasing a pretty good amount of stock. So as this company continues to repurchase stocks at levels this far below our fair value estimates, that just should accrete economic value to shareholders over time.
Now, your second pick this week is a stock we haven't talked about in a